What's up everybody? Welcome to the Stocks channel. My name is Cory and today in the stock market we continue to see the bulls pushing higher, but they are now approaching some very critical bear market resistance, and we do have CPI data coming out tomorrow morning. So first up, let's take a look at the SP500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were up 1.26% and we are getting very close to some very critical resistance just above, which does define this bear market. So you want to be paying very close attention to the price action, especially with CPI data coming out tomorrow. Now we did gap up and close near the high of the day, so without a doubt that is a very bullish candle. But we do have a situation where we have a gap below around 390.7 and the gap fill above just below 397. So we have two gaps to fill, but the bulls do have the upper hand in the short term. But I want you to pay attention to two very critical resistance zones, which is going to be this negatively sloping 200 daily moving average around 397 and exactly where we have the bear position between 399 and 400. If the bulls push through all of that resistance, it is going to look like a very bullish breakout, which does mean we will see price action breaking out above the bear market resistance trendline, which we did not see any daily closes above for the entire bear market of 2022. So if the bulls push above SPY 400, that is going to be an incredibly strong bullish signal. But I will caution you, it is much better to wait for price action to confirm it, which means if you are still bullish on this market and you've been bullish above SPY 380, you need to start taking some risk off the table as we approach critical resistance. Remember, we want the price action to prove everything, and the price action is going to guide us from here. But as we wait for that price action, we don't want to make any guesses. So we either need to up our risk levels or we need to go ahead and exit our long positions and wait for the confirmed breakout. Now, if you've been a disciplined bear and you've been sitting on the sideline waiting for an opportunity to short this market, you are going to be getting that opportunity very soon around this very critical resistance zone, because you do have very good risk reward ratios for short trades, knowing that you can't lose too much money because you instantly know you're wrong if SPY breaks above 400. So use that critical resistance zone to take profits and or short from, which is going to be between 397 and SPY 400. Look for that gap fill around 396.31 and the gap fill to the downside right around 390.7, because those are going to be the gap fill zones that we're likely going to see in the very near future. Critical support for you bulls is down here right around 390, and as long as we're above 390, you can stay bullish for an attempt at the breakout above 400. If we break down below 390, we're likely coming back down towards 381 to 380, and then we're likely resuming the bear market if we break down through that support. But right now the bulls are in control in the short term and likely going to continue to push higher. In the Nasdaq 100 triple Qs, we were up 1.73% today, and the triple Qs also did gap up and close at the high of the day, getting back over the 50 EMA, and with the second day in a row closing back over the 20 daily moving average. So without a doubt, that is a bullish breakout, and the gap to fill to the downside is just below 273, and we have the gap to fill to the upside just above 283. Above 274, our critical resistance is going to be 280 and this gap fill at 283, and we have the bear positioned right here at triple Q's levels of 288. Just like on SPY above 400, if the triple Q's can break above 288, we're likely going into a sustainable bull rally, which means we can come all the way back up to fill the gap at 308, but we need the price action to prove it by confirming the breakout above that very critical bear market resistance. As bulls on the triple Qs, manage your risk down here right around 273 and this 20 daily moving average and critical support zone between 268 and 270. On the Dow Jones, we were up 0.75% today, and the Dow Jones continues to look bullish with the price action above all of the moving averages and continuing to develop that bull trend. So in the Dow Jones, you want to continue to stay bullish above 336 and 334. We have that double bottom price target very nearby, which is right up here at 341. And if we blast right through it, then we're likely going to 346 and then 350. Stay bullish as long as we're above critical support, because this is a bull trend with bullish price action. On the Russell 2000 IWM ETF, we were up 1.25% today, and again we had another very bullish breakout with the price action back over all of the moving averages, and we did get the confirmed breakout above that critical resistance, which was the 200 daily moving average at 182. From here, the small caps can now run to 188, so you can manage your risk as small caps bulls right here right around 182, or down here right around the breakout zone between 179 and 180. There's also strong support at 178, so there's going to be a ton of support for the bulls to continue to build on. as the bulls continue to build a bullish trend in the small caps. On the ARKK ETF, we were up 3.39% today, and ARKK absolutely obliterated that gap at 34.4, and we blasted through the resistance at the 50 EMA and closed above 34.6. This is a very bullish breakout, but it's also going to be very strong resistance. So as long as we're above 34, you can stay bullish for the test of 38. But if we break down below 34, we could come back down to 32.5 or fully close that gap at 31.68. On the VIX, we were up 2.43% today, which is completely normal because the VIX is in this support zone between 20 and 21, and we do have CPI data coming out tomorrow morning, so it's no surprise to see the VIX is stabilizing around this support zone. Just remember, if the VIX does crush down below 20 and starts heading down towards 18, that is going to mean that fear is leaving this market, which means we can go into a sustainable bull rally. So you don't necessarily want to become more and more bearish if the VIX continues to crush down lower. However, VIX above 20 is still a volatile market, so respect the fact that we're still in a volatile market until we get the confirmed breakout in this bear market. On Bitcoin, we're currently up 0.72%, and Bitcoin is just continuing to climb higher towards this critical resistance at 17,800, and the bull breakout will be a close above that level. From there, we can go to 19,000, and then above that, we'll likely go to 19,500. So you can stay bullish on Bitcoin as long as we're above 17,000 or 16,850. On Amazon stock, we were up 5.81% today and on increasing volume. So there's no way this is looking like bear market behavior, and we are getting the bull breakout above the resistance trend line at 94. That doesn't mean we're out of the woods just yet, because we have the next strong resistance just above between 96 and 97, and we do have a gap to fill to the downside down here right around $90.86. So there is still the possibility this could be a false breakout and we could get rejected and head lower. However, going up this much on increasing volume is always a bullish indication. So if we blast through that resistance between 96 and 97, we will be looking for that next leg higher at 102 and the gap fill at 110. On Microsoft stock, we were up 3.02%, and Microsoft is getting that strong bounce between 222 and 225, trying to fill the gap at 237.4. At that gap fill, I expect to see strong resistance from the negatively sloping 20 daily moving average. So if the bears are going to show up in Microsoft stock, it is going to be very soon. If we blast through that resistance, we're looking for the strong resistance between 242 and 244. And if we break through all of that resistance, we'll likely head all the way back up to 252 and then 255. Downside critical support remains 225 and 222, because if we lose that, we're likely coming back down to 214. On Nvidia stock, we were up 0.58% today, and Nvidia is butting its head up against the bear market resistance trend line at 160, which means if we break out from here, we should easily get to 166, and then above 166, we'll be looking for 174. Look for critical support down here at 156, and yes, you can stay bullish above that level, but if we break down below that support, we are likely coming down to fill the gap at 150. On Tesla stock, we were up 3.68% today, and Tesla got a very bullish breakout above 123 intraday, but we are finding selling pressure at that level, which is absolutely no surprise. We could still get rejected between 123 and the 20 simple moving average around 128 and still come down here and fill this gap around 114. But keep in mind, there's no guarantee that that gap has to fill right now. So there is going to be the possibility of a short squeeze above the breakout between 123 and 128, which means we can easily get to 138 and then 155 in a hurry. Remember, this was full-blown capitulation, and I've talked about this before, that sometimes when you get capitulation, you do get these V-shaped recoveries, and it can happen very quickly. So Tesla breaking out above 123 is going to be the catalyst that could start this into a V-shaped recovery. So continue to manage your risk around that resistance at 123 and this gap fill down here right around 114. We continue to see extremely high volume buying at this weekly critical support level, so you can continue to stay bullish down here at this very well-defined risk level, knowing that if we start breaking down below it, we are likely heading to 94. On Apple stock, we were up 2.11% today, and Apple is back to looking bullish with the breakout back over the 20 daily moving average, which is that critical resistance zone around 133. From here, we can run back up to 135, and then we have strong resistance between 138 and 140. So Apple will look like it is breaking out of the bear market downtrend once it starts breaking back out above 140, which means it will likely start running up to 150. However, we have to wait for price action to confirm it, and the next obstacle for Apple will be that resistance at 135. You can stay bullish above 133 and 130, but if we lose that support, look for a retest of 125 and 126. On the financials, we were up 0.93% today, and the financials continued to look bullish with the price action above all of the moving averages and have a very well-defined bull trend. The industrials were up 0.96% today, and they also have the bullish price action with the bull trend. The healthcare sector was up 0.56% today, back over the 50 EMA and back over the critical support level at 134. But we are still looking like we're developing a downtrend, so if we lose support, get ready for that next leg low at 131. The energy sector was up 0.31% today and continues to find resistance right here at 88.6. So that will be the bull breakout if we can break above that resistance, and you can stay bullish as long as we're above 86.2. So jumping back over to the SP 500, tomorrow will be a major catalyst with the CPI data, but so far it looks like the bulls are in full control in the short term, but they will be butting their head up against very critical bear market resistance in just a matter of days from here. So continue to manage your risk and respect the very critical resistance that we're about to encounter, because that is where the big bad bear is living, and he will show up and he will make an attempt to make a stand and drive prices lower. Always manage your risk and have a trade plan that is prepared for either scenario. And then from there, just let the price action do all of the talking and don't be biased in this market, because there is still the possibility we get a bullish surprise and we can go into a bull rally from here. Also, don't forget I have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. You can learn more about Bank Trade Alerts or learn how to subscribe by clicking on the link in the description of this video. If you're looking to become a better price action trader, come join us over at the Stocks Channel Trading Discord community, where you get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Discord by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.